ongoing crisis at Jet Airways. A change in management is imminent.
जेट को जो 1500 करोड़ रुपए अगर आज शाम तक नहीं मिलते हैं तो ग्राउंड हो जाएगी पूरी एयरलाइन.
They are looking to ask Naresh Goyal to step down from the board of Jet Airways with immediate effect. Lenders led by SBI are looking at a change in management and may soon ask the airline's founding chairman Naresh Goyal to step down.
हमारी को सर्विस मिलेगी नहीं 30-35 साल की मिलेगी कोई हमारी चीजें कहाँ से चलेगी सर.
These are some of the last 11 remaining aircraft of Jet Airways. After flying non-stop across India and abroad, they are now parked in a corner at the Mumbai airport for the last 5 years. They may never fly with the Jet Airways logo again. Such is the story of this once iconic airline that ruled the Indian skies for nearly 3 decades, ferrying passengers around the world in comfort and luxury. But after facing one turbulence after another, it simply plunged and could never recover. 17th April must have been the hardest day for those 16,000 employees and thousands of contractual workers when Jet flew its last flight from Amritsar to Mumbai. What went wrong? How could an established global brand experience such a dramatic collapse, jolting the lives of thousands of employees, some of whom are still hoping to see it fly once again? And what were the unforgiving circumstances that led to the downfall of the man who had built this brand? Jet Airways was Naresh Goyal's first venture. He started his career at his uncle's travel agency and then rose to become an independent general sales agent in 1982 for Gulf Air and other international carriers. This was India before economic liberalization. Foreign airlines were not able to sell tickets directly in the market. Enter Naresh Goyal, who was the biggest representative for foreign airlines in the Indian market. Until the 1990s, India had only 2 airlines, Air India and Indian Airlines, which were operated by the government. In 1991, the government brought the open sky policy, allowing private players into the aviation sector, and they were called air taxi operators. East West Airlines was the first private operator to own an air operator permit, followed by Damania Airways, Modi Luft and Gujarat Airways. It was only in 1993 when Jet Air decided to launch air taxi operations with 4 planes in partnership with Kuwait Airways and Gulf Air.
So 1993 was the birth of Jet Airways. The idea being very clearly to connect traffic coming in on Gulf Air, which was our predominant GSA airline, passengers coming from the United States to India, passengers coming from UK to India, and of course the huge labour movement between India and the Gulf. So that started the airline in 1993. 4 aircrafts were brought on lease from Ansett Airlines in Australia, and these were the new version of it.
The promoters, Mr. Goyal, along with Kuwait Airways and Gulf Air, brought in first time in India the 737-300 series of airplanes. Till then, it was just the 737-200 operated by Indian Airlines and the Airbus 320. 737-300 with a 48-inch pitch business class was something of a revolutionary thing at that time.
Naresh Goyal brought the quality of international market into the Indian skies. He brought a business class which was an envy, and till today people remember it. He made it into such an art to give passenger experience that people didn't forget that thing very easily.
Right from the boardroom understanding to the understanding at the operating level, which is the airport, he had everything very well known. He was also helped, in my opinion, by a great number of people who were intrinsically linked to the airline business. He would very often interact with people, right from loaders and the cleaners and the drivers. He would spend a lot of time with airport managers, and he created a large number of people who would resonate with his own philosophy and thinking of providing the best as far as the aviation sector is concerned.
And that attitude of giving the best service at affordable rates made Jet Airways the most preferred airline for Indian corporates and celebrities. The airline grew its market share from 20% in 1997 to 42% in 2001, becoming a market leader. While the domestic business grew, Goyal saw an opportunity to capture the international traffic. He was tired of selling tickets for other foreign airlines and wanted Jet Airways to spread its wings and fly overseas. India's foreign traffic at that time was largely catered by foreign airlines. In March 2004, Sri Lanka became the first international destination. A Jet Airways flight took off from Chennai and landed in Colombo. A year later, in February 2005, Jet Airways launched an initial public offer which was heavily oversubscribed, and it raised around 1900 crores. A month later, in March 2005, the airline was listed in the stock market at over 1200 rupees per share. With a dream to become a global brand, Jet soon started to expand its international network. In October 2005, the airline placed orders for wide-body planes, which included 10 Boeing 777s and 10 Airbus A330s. This was seen as a huge order at the time and required large capital.
Wide body is a different animal. The animal is so different that you were buying a 737 800, 900 for 40 million miles, while you were buying one 777 for $270 million. So the numbers totally dramatically changed.
This hasty international network and fleet expansion is what many former senior executives call the first big mistake.
Purchase of these wide-body airplanes meant that you are taking on more debt onto your books, which means your finance costs and your interest servicing also started to go up. And some of these costs or cash flows are something where you cannot default, right? So every month you have to pay that loan to whichever banks you've kind of borrowed from. And with the result, Jet had to then kind of access any kind of financing which was available. So slowly your cost of financing started to go up.
But Jet continued with the expansion drive and launched its first long-haul flight to London in May 2005. It wasn't a profitable route due to demand mismatch, but it had already accounted for those losses.
We had different route patterns. We were losing monies on flights because we could have a flight which was 100% load factor on one direction, but because of the seasonality of the business being different, the return traffic would only be 50%. So when we added up the two, the route made losses. You had all these wide bodies coming in. You had launched to London. It started with a Bombay-London, followed by a Delhi-London, followed by a second Bombay-London. The more we launched, the more we lost. Now, to fund these losses, obviously, where do you turn to? You turn to the banks.
International business, you are not able to make money overnight. It takes anywhere between 18 to 24 months for you to start making money in the international business. So there were initial losses with all of these international businesses.
While the international business was yet to stabilize, Naresh Goyal took another major decision. He decided to acquire domestic carrier Air Sahara in 2007 for nearly 1,500 crore rupees.
The original price was 2,000 crore. Now it is 1,450, and they already had our 500 crore against their personal guarantee, which was with them. And the rest, we had given them a bank guarantee of 1,500 crore.
Former senior executives at the airline say they cautioned Goyal to avoid this expense, but he had already made up his mind. And this move, according to former top executives, was the start of the turbulence.
There is no change in the thinking of the commercial. Commercially, it is good. At that time, it was good for the shareholders that time. Keeping in mind the present condition aviation, it is again going to be very good as far as the deal is concerned.
We bought an airline which had nothing. It didn't even have a chair and a table. Everything was either leased or rented. All the aircrafts were leased, very high lease rentals, long-term agreement which we couldn't break. and the airline purchased this carrier for that pot of money which was collected to fund the international operation. The aircrafts which were bought from Sahara were 27. Only 9 were flown. Balance were on ground. Now to maintain them and bring them back was pouring millions and millions of dollars inside an airline which was grounded. So we poured that money into the thing. So where does that money come from now again? Again banks.
That is a time where I think the first pain point of the company really started. And we realized that it was becoming difficult because there was a lot of cash outflow which was going on to take over and maintain that particular organization.
So Jet was battling two things, a loss-making international business and an expensive acquisition. All this at a time when Kingfisher Airlines was making a splash, low-cost carriers like Indigo and SpiceJet were starting to gain prominence.
Each company has its own balance sheet, its own management. You know, in liquor business, they have the best liquor, they also have cheap stuff. So I don't, in any business, be consumer, be liquor, be the tobacco business, be in the hospitality business, in or cars, you know Honda, you know you know Toyota, they also have Lexus, they have also cheap cars. So I think it is, in India it sounds new because people don't know. I mean they know it has not been done, but we have enough expertise to run both businesses, if necessary, third model, fourth model.
From a logical standpoint for any airline to grow, it would have been a great decision for you to acquire somebody rather than adding so many aircraft, adding so many pilots. Pilots was a challenge at that point in time. So it made commercial sense for Jet to go and acquire an airline such as Sahara. I think what happened is the Sahara acquisition, along with so many other different things, made it unviable for Jet to be able to run its business profitably. And on the other hand, obviously there was Indigo, there was Kingfisher, there was Deccan, there was so much of noise happening on the low cost space. So it became difficult for Jet to sustain its cost model to be able to offer low cost fares, and which is where the whole revenue and cost mismatch started to happen.
While low-cost carriers started the price war, Jet was also hurt by the steep fuel cost and a strengthening US dollar.
Previously we were buying a dollar for 38, 40 rupees. Now we are buying for 45 rupees. That kills you. Second, the fuel price, which was consistent at $73, $74 a barrel, started rising 80, 90, 40% being your cost, operating cost of the aircraft being fuel. The economics started going down south in 2008. By the time Sahara was bleeding us, which was called Jet Light, and the international operation was bleeding us very heavily. And by 2009, it became virtually impossible to even run a flight profitably under 1 hour of duration. So the idea of having more and more flights couldn't work anymore. So if you were going to run a Delhi-Jaipur or a Bombay-Pune, even if you had a 100% load factor, the aircraft would not work. So it was better to park the aircraft than to fly it.
There came a point when Jet Airways had planes on ground but no money to operate them. And that's when the management decided to lease out some planes to other airlines.
You take care of your car very nicely, but when you sit in a taxi, you don't. And that is exactly what happened. We gave brand new aircrafts to carriers who had no interest in the aircraft except operating them. So what we gave them was brand new, what we got back was junk. Again, maintenance costs.
Losses continued to mount. In his annual letters, Naresh Goyal started writing about the weakening rupee and costly air turbine fuel. Jet closed FY13 with a consolidated loss of 779 crores. It became crucial for Naresh Goyal to find an immediate solution to save the airline. That's when he took the tough call to dilute his stake.
I own 80%. If I didn't believe in the company, I could have diluted more and made money. but we are here to stay in this business. This is the only business we are in, and this is our core business. I mean, nobody stopped me to dilute more, but I did not want to dilute. I wouldn't dilute, and we will always continue controlling the majority.
After months of negotiations in April 2013, Abu Dhabi-based airline Etihad bought 24% stake in Jet Airways for 2,000 crores and over 50% stake in Jet Privilege for over 800 crores. This was the first time a foreign carrier directly invested in an Indian airline. The investment did come as a temporary relief for Jet Airways, but it couldn't really wipe out the deep structural challenges.
A large part of that money was largely used to pay vendors like your oil companies, your lessors, because by then Jet had been behind on so many of their regular payments that it was important for it to raise cash to be able to take care of your working capital requirements, right? There were also so many short-term loans which had to get repaid at that point in time. So there was very little money from the Etihad deal which was actually deployed in growth, right? Everything was kind of to be able to take care of your past sins, if I may say so.
Jet continued to post losses and closed FY14 with a loss of over 4,000 crores. Senior employees also talk about Naresh Goyal's displeasure over Etihad's growing interference in the day-to-day operations. It is believed that Etihad was looking at Jet as a feeder airline to carry Indian travellers to its base Abu Dhabi and then fly them to other destinations. And it did see a jump in its numbers. In May 2016, Etihad said the alliance carried 63% more passengers from India to Abu Dhabi in 2015 than what it did in 2014. This hurt Jet's own aspiration of becoming a global airline. Meanwhile, domestic competition was also getting intense.
Indigo was actually adding one airplane every month, and because of the fantastic rates that they had got on sale and leaseback, it was also giving them the kind of cash flows to be able to sustain initial cash losses, right? So on the one hand, there were airlines like Indigo who was consistently growing their capacity, who were consistently able to offer lower fares because their cost structure was lower, and also to the extent take the fight to the market, because even if there are going to be losses, they had the appetite to stomach those losses. On the other hand, Jet did not have that spare cash flows. It was not able to afford any losses that it could make. So the only other option was to then start looking at cutting your operations, right? So then you would start looking at which are all the sectors which are not making money after repaying, let's say, variable costs. You start to ground those airplanes one way or the other. And once you start to do that, your fixed costs will start to then balloon one way or the other.
Debt kept mounting and the cost versus revenue gap kept widening. Jet's total debt in FY15 increased to 11,900 crores. The financial crunch continued and Jet started to look at cost-cutting measures, including reducing employee expenses.
I apologize for all the agony what you must have gone through and your families or with your families since yesterday morning. My management did it on the basis of some economic conditions. I request all of you to start from tomorrow morning your work as before.
One of the criticisms against Naresh Goyal's style of working was he used to carry too many employees at the top. This company definitely, when you look at the comparative level, we would have more number of managers and general managers and vice presidents as compared to a company of a similar size. For example, there was certain department which had 2 to 3 vice presidents. He brought a lot of expatriates and the expatriates were paid very well. So in terms of cost, even in terms of management cost, I think that is a definite area which was of concern. I would definitely feel so. Apart from Sahara, I think the fact that uncontrolled expenditure in terms of, let's say, managing the company, there was a deal that was done with a very big IT company for services to be there. It cost some money. I don't want to name the company with which the program was done. A complete rehaul of the entire IT system. It costs a lot of money. Now these are some of the expenditure that came into the picture. Now whether we needed it, we didn't need it, nobody thought about it. Possibly it was approved and then it was spent. There were many such instances where one would feel, for example, issues relating to engines, for example. If you talk to somebody in the engineering department or you talk to somebody in that, they would possibly tell you as to where these unwanted expenditure were there. There were concerns which were expressed in many departments of the company that we are incurring costs which are unusually high. There were even issues or instances where somebody felt that a proper contract has not been negotiated. For example, engines, for example, or there would be, I mean, I'm not an expert to speak on that, but I'm sure if you speak to people who are in that, but it would not be wrong to say that there were murmurs about these problems in the organization.
Costs kept piling up and Jet was in dire need of funds. That's when the airline's promoters rushed to the banks seeking immediate loans.
I took charge as chairman in 2017. So the accounts would have been in trouble maybe earlier or so before. And in 2018, these people approached SBI and all these issues around that, what is the future of Jet Airways and how to keep it up and running. Basically, they wanted to monetize some asset. They had this jet privilege, and there were a few aircrafts also. But because the State Bank of India is not into lending against aircraft or jet privilege and all that, so we could not fund it at that time. And I have captured in my book also that there was a great effort on the part of the State Bank of India to lead that effort, but somehow it did not succeed.
The second half of 2018 was about desperate efforts to save the airline. For several weeks, officials of Jet Airways, Etihad and lenders met at the State Bank of India headquarters in Mumbai to discuss ways of resurrecting the airline. Many ex-employees have confirmed that Etihad management and Naresh Goyal were often at loggerheads in these meetings. Etihad, like many other interested parties, was willing to invest in Jet, but only if Goyal gives up control. Rajneesh Kumar in his memoir mentions that he had also learnt about the talks between Naresh Goyal and the Tatas, but it hit a dead end over Goyal's reluctance to give up the chairman's position.
The State Bank of India was not directly involved. This is something which you can say was, I don't know, a rumor or some reality, but some people told me that some discussion happened, but everybody wanted that the existing promoters, they have to go out, which at that point of time, that condition was not acceptable to the existing promoter.
In December 2018, Jet Airways delayed payments to lenders due to lack of funds. Subsequently, Etihad, the last remaining savior for the airline, also backed out and offered to sell its entire stake to SBI at a loss, even after Naresh Goyal stepped down as chairman. It was too little too late. His late exit was not enough to keep the airline afloat.
We're here to stay. We are here to stay. We're not a normal shareholder listening. We're there to support. We're there to understand. We're here to build with Naresh, not actually build, rebuild Jet Airways, because he's actually done it before.
Once Etihad decided that they would not like to step in or they would not like to revive the airline, then it became increasingly difficult for somebody else to step in. Etihad is still, because they were in Middle East and a lot of passengers. They are transit passengers which take either Dubai or Abu Dhabi as a transit point. And it's a lucrative international market when it comes to flying Indians out of India and provide them connectivity for international destinations. So business case for Etihad was very strong. But because, as I said, of various reasons, they lost interest. then the writing on the wall was very clear that it wouldn't be possible to revive the airline.
Finance Ministry sources tell us the government has given banks the go-ahead to work out a revival plan. As the uncertainty continues, Jet's operations have taken a big knock. As of today, only 35 Jet Airways planes are currently active out of a total fleet size of about 119.
In April 2019, Jet's fleet size had reduced from over 120 planes to just 20 planes. Things deteriorated pretty fast. The airline's employees who were in talks with the banks claim the lenders were not sincere in their efforts to revive the company.
Till the day we shut shop on the 17th of April 2019, we were upbeat about it, and post that as well.
At the time of closure of Jet Airways, Jet had a fair value of around 5,900 crores. Jet had annual cash flows of 27,000 crores. So any airline having that amount of cash flow and as well as a fair value, we had around 12 aircrafts. Even after the lessors took away most of our aircrafts, we had around 12 aircrafts with us, which were mostly wide body aircrafts. At the time of suspension of operation, we had seen that our late finance minister had made suggestions that they would be infusing 1,500 crores in the company, and thereby the Jet Airways operations would be restored or something. Post suspension of operation also, our CEO had visited his office with a proposal, and we had sought 498 crores of bridge over loan at that time. So post elections, nothing came up. I mean, neither the 498 crores of bridge over loan came, nor the 1,500 crores that was mentioned prior to elections.
Banks did not rush for bankruptcy. Banks went to NCLT only when it became very clear that now there is no other option left. Revival was possible only if it had happened in the very beginning, and a new promoter or existing promoter was able to put in good amount of cash by way of equity. So that was not happening, and that's why we as lenders, despite the best intent, could do nothing.
In June 2020, the Lenders Consortium shortlisted 4 little-known bidders to revive Jet Airways. And in October 2020, the Committee of Creditors chose Murari Lal Jalan and Calrock Capital as the winning consortium to take over the airline.
We have got the Jet Airways with the no liabilities, neither to any of the employees or not to the bank, not to anybody. So we are going to start the Jet Airways with the clean slate.
Banks claimed 7,800 crores from the potential owners, but then took a whopping 95% haircut on their dues. Meanwhile, the founder Naresh Goyal was charged with money laundering. Goyal was arrested by the Enforcement Directorate in September 2023. He was accused of siphoning off a significant chunk of the 6,000 crores that banks had lent to Jet Airways. ED accused that Goyal transferred money to the accounts of his family members, including his wife and children, as well as to companies and trusts created by him in tax havens such as Jersey and the British Virgin Islands. There's no sign of Jet Airways coming back to life. For the last 4 years, the Jalan Calrock Consortium and banks have been fighting over the transfer of airlines' ownership. Banks have told the Supreme Court they don't believe this consortium has the intention to revive the airline, and the limited money infused by them could even be laundered. Despite all the turbulence, Jet Airways continues to trade in the stock market with a market cap of 475 crore rupees. It's down 97% from its all-time high of 1382 rupees per share. But a defunct airline continues to trade in the stock market even as a revival looks far-fetched.